Hello, Gary again. I thought I would make a video for those just getting started in dividend investing. In my previous videos, I explained my strategy and how I'm getting a $500 to $600 per month dividend income on my original $24,000 out-of-pocket investment. I've since put another $2,500 into my dividend account, and with some modifications to my strategy, I'm now getting $600 to $700 per month. But that's a subject for another video that I'm planning. I'm testing this change to my strategy right now, and once I see that the strategy actually works, I'll make the video on the changes to my original strategy for those who are interested. Oh, I always forget to ask folks to hit a thumbs up if you like this video. So if you find this video valuable, please do that for me. It helps me get better results in people's YouTube searches. And that way others will find my videos also. And also, if you find value in my channel, let your friends know about me. The simplest way to find my videos is to search on my name, Gary Rudder. But this video is for those just getting started or just thinking about dividend investing. Most are probably already aware that some companies pay a dividend to their shareholders based on the profit that the business is making. For example, if you own 1,000 shares of a stock and the stock pays 10 cents per share each quarter, then you receive $100 in dividends each quarter. If the stock sells for $10 per share, then your 1,000 shares would be worth $10,000. So here are some examples of how to determine what your dividend's going to be. Like the first thing I mentioned was a $10 per share value of the stock. If the stock's paying 10 cents per share per quarter, most companies pay their dividends quarterly, then the math would be you take the $10 per share divided by the 10 cents, which equals 0.01 or 1% yield per quarter. So every quarter you get a 1% yield. Multiply that by 4, it gives you a 4% yield per year. The next example is the $10 a share value, and let's say the company's paying 40 cents per share dividend per quarter. So here we're looking at the same math. The $10 divided by 0.4, 40 cents, gives you a 0.04 or 4% yield per quarter, and you multiply that times 4, and you got a 16% yield per year dividend, which is a pretty good dividend. Alright, here's another example, and that would be a $10 per share value, and the company pays their dividends monthly, and there are companies that pay their dividends monthly. So let's say they pay 10 cents per share in dividends each month. So then you would take the 10 divided by the 0.1, and you got 0.01 or 1% yield per month. So you multiply that by 12 months in the year, and now you got a 12% yield per year. And it's kind of nice having that monthly dividend roll in every month. And that's basically in my other videos I explain how I'm investing in stocks that paying 18% or better dividends per month. I explain in my other videos how these 6 stocks, how I use my strategy. I explain, give the names of those stocks so you can look for those videos. I've got a link in the description below to my playlist, and you click that link, you'll see all my videos, and you can watch my other videos that explain my strategy, which has been earning me $500 to $600 per month in monthly dividend income. Or you can simply do a YouTube search on my name, Gary Rudder. My name, Gary Rudder. So you do a search on my name and you'll see my videos that way. Now, companies that pay dividends will declare how much dividend they will pay per share, anywhere from a few days before or sometimes as much as a month before. So that declaration is called, that date that they make that declaration is called the declaration date, and they will set a date that's referred to as the ex-dividend date. Now what this means is that anyone who owns their stock on the ex-dividend date will get the dividend for that declaration period, quarterly, monthly, or whatever. So this means that you need to purchase the stock sometime before the ex-dividend date. You need to be the owner of those shares that you purchased when the stock market opens on the ex-dividend date. Now you will find that the value of the stock after they pay their dividend will drop, typically about the amount of the dividend. So at that point in time you've not made any money, so you have to plan on holding the stock. Hold on to it for a while. After some time goes by, the stock will stabilize and the price usually comes back to around where the price was before the dividend was paid. But if you've got a stock that's paying good dividends, especially a monthly dividend stock, you basically just hold on to it, and every month you get those dividends, and you don't worry as much about the value of the stock. It's going to go up and down as the stock market does. If you watch my other videos, there's one that describes tools I use for looking for stocks, just research tools, websites and things that when you're looking for good stocks that pay dividends. So you can watch that video on the tools I use. And also the investing platform I use is M1 Finance. I've put a link to that site in the description below also, and I have a video that basically shows how the M1 investing platform works. If you can take a look at that video and check that site out. Hopefully if you're just starting to look into dividend investing, you have found my videos valuable. Again, please hit the thumbs up if you like this video. I'm also putting my email address in the description. I'm happy to answer any questions you may have. Just drop me an email and I'll be happy to answer. Well, I hope you've enjoyed this video. I hope you'll go search on my name or click on my playlist in the description and watch some of my other videos, and I hope you find the information valuable.